Imagine this, a tech stock that exploded out of the gate with a jaw-dropping 333% surge on its IPO day, turning early investors into overnight winners. But now, just weeks later, it's dipped over 35%, sitting at around $70 a share. Is this a golden buying opportunity or a trap waiting to snap? We're talking about Figma, ticker symbol FIG, the design powerhouse that's revolutionizing how teams create everything from apps to websites. If you're an investor eyeing the next big thing in software as AI and collaboration tools heat up, this could be the stock that supercharges your portfolio in 2025 and beyond. Stick around, because by the end of this video, you'll be itching to dive deeper into Figma's story, its massive potential, and whether now's the time to jump in. Let's break it all down and get you pumped for what's next. First things first, what exactly is Figma? If you've ever dreamed up a killer app, designed a sleek website, or collaborated on a project remotely, Figma is the magic behind it. Founded in 2012 by Dylan Field and Evan Wallace, Figma started as a browser-based design tool that lets teams work together in real time, no more emailing files back and forth or dealing with clunky software. Think of it as Google Docs meets Photoshop, intuitive, cloud, native, and built for speed. Designers, developers, and even non-tech folks use it to prototype interfaces, brainstorm ideas, and iterate faster than ever. With features like multiplayer editing, plugins for everything from AI-generated assets to integrations with tools like Slack and Jira, Figma has become the go-to for giants like Microsoft, Zoom, and Uber. Over 4 million organizations worldwide rely on it, and it's not just for pros. Anyone can jump in and create stunning visuals without a steep learning curve. Figma's rise has been nothing short of meteoric. Starting from humble beginnings, they bootstrapped their way to unicorn status by 2018, raising funds from top VCs like Andreessen Horowitz and Sequoia. By 2022, Adobe tried to scoop them up for a whopping $20 billion, but regulators in the EU and US shut it down over antitrust concerns, leaving Figma independent and hungry for growth. That brush with acquisition only fueled the fire, pushing Figma to innovate harder. They rolled out dev mode for seamless handoffs between designers and coders, and FigJam, an online whiteboard that's perfect for remote brainstorming. Fast forward to July 2025, and Figma finally went public in one of the hottest IPOs of the year. Priced at $33 a share, the offering was 40 times oversubscribed. Investors couldn't get enough. On debut day, the 31st of July, shares rocketed to over $140, giving the company a market cap north of $50 billion at its peak. That's the kind of hype that turns heads and builds fortunes. But here's where it gets really exciting. Let's crunch the numbers on Figma's financial firepower. In 2024, revenue skyrocketed to $749 million, up from under $100 million just 3 years prior. That's explosive growth in a tough tech market. Their latest Q1 2025 results? A blockbuster $228 million in revenue, up 46% year over year, putting them on a $913 million annualized run rate. Even better, they flipped to profitability on the bottom line for the first time, showing they're not just growing fast, but smart. With a subscription model that's sticky, think freemium for starters, then premium plans starting at $12 per user per month, Figma boasts net retention rates over 130%. That means customers aren't just sticking around, they're spending more over time. As of now, with a market cap around $34 billion, the stock trades at about 37 times estimated 2025 revenue. Sure, that's premium compared to peers like Adobe at 7.5 times or Microsoft at 12.5 times, but Figma's growth trajectory justifies it. Analysts project revenue could hit $1 billion this year alone, driven by enterprise adoption and AI features like auto layout and smart prototyping. Why is Figma poised to dominate in 2025? The design software market is booming, expected to reach $15 billion by 2028, and Figma is at the forefront of the shift to collaborative AI-powered tools. With remote work here to stay and companies racing to build digital experiences, Figma's platform is a must-have. They're integrating AI deeply. Imagine generating wireframes from text prompts or automating repetitive tasks, saving designers hours. Plus, the failed Adobe deal left Figma with a $1 billion breakup fee, giving them a war chest for R&D and expansions. Reddit forums and Wall Street are buzzing. Some call it the Canva on steroids or the future of creative work. Hedge funds are loading up, and whispers of partnerships with big tech could send shares soaring. If the economy stabilizes and interest rates keep easing, Figma could capture even more market share from legacy players like Sketch or Envision. At its current dip to around $70 down from a 52-week high of $143, this feels like a steal for a company growing at 40% plus annually. Imagine if Figma becomes the default design OS for the AI era. Early investors could see 2x, 3x returns as it matures. Of course, no stock is a sure thing, and I want to keep it real with you. Figma is still young and unprofitable on a full year basis, with EPS at negative $5.16 trailing 12 months. Competition is fierce, Adobe's not backing down, and upstarts like Penpot are nipping at their heels. The recent 35% pullback after the IPO pop shows volatility. Tech stocks can swing wild on macro news like rate hikes or recessions. Their high valuation means any growth slowdown could hammer the price. Some analysts warn of downside to $40 if multiples compress to peer levels. Regulatory risks linger too, especially in a world scrutinizing tech monopolies. And while AI is a tailwind, it could disrupt design jobs if not handled right. Always remember, do your own research, diversify, and consult a financial advisor. Past surges don't guarantee future moonshots. So, what's the bottom line on Figma stock? This is a high-octane play on the future of design and collaboration, with fundamentals that scream growth and a recent dip that screams opportunity. If you're bullish on tech's creative side and believe in Figma's vision to make design accessible to everyone, Fig could be your next portfolio rocket. We've seen it surge 333% post-IPO. Who's to say it won't do it again as Q2 earnings drop on the 3rd of September? Hit that like button if Figma's got you excited, subscribe for more deep dives into breakout stocks, and comment below. Are you buying the dip on Fig or waiting for more proof? Let's discuss in the comments. I read every one. Thanks for watching. Invest wisely, and I'll catch you in the next video where we uncover the next hidden gem. Stay pumped.